Okay, it's such a privilege to be on stage to represent Africa. This is the first time Africa is on stage as a Bitcoin treasury company. So, executive chairman of the African Bitcoin Corporation and also director of the Bitcoin strategy. So, on our board of directors, I finally got our CEO convinced, orange pilled him a couple of years ago, and we've changed the company. It's a Johannesburg Stock Exchange listed entity. We've just started buying our first Bitcoin. So as far as we're concerned, we're junior. These are our seniors, and yeah, we're coming. So Africa's, yeah, excited. Thank you.
Hi, everybody. Russ Jacobsen, COO at Moon Inc. in Hong Kong. And I'm actually quite new to the company, just joined about 2 months ago. Been a Bitcoiner for about 10 years, but was in TradFi for the last 20, all in Hong Kong. So I'm the sort of local guy, local talent on the ground for us. We have a pretty substantial plan for the whole of Asia. So as maybe you know, BTC Inc. is sort of behind it, and we have another sort of backer, which is a VC called Sora Ventures, who've effectively partnered to launch multiple companies throughout Asia. Moon Inc. is also taking a stake in those partner companies. So we have a stake in the Thai company DV8, we have a stake in BitPlanet in Korea, and we'll be launching a number of other markets in APAC over the next couple of quarters. So very exciting. We're doing it slightly different in Asia. It's really sort of a network of companies that will be kind of leveraging and leaning into each other. So looking forward to chatting with you guys, and pleasure to be here.
Hi everyone, Khing Oei, founder CEO of Treasury. We announced a funding round about 2 months ago, about $150 million, backed by Nakamoto and Winklevoss. We are going public in Amsterdam through a reverse listing, which is in process. And we also, as part of our business, bought the Bitcoin Amsterdam conference, which are all here. So we're super excited to host everyone.
Hello, everyone. I'm Andersen, the executive chairman and co-founder of H100. We're currently the leading Bitcoin treasury company out of the Nordics, and I've raised 120 million since we listed in April.
Hello, everyone. Alexandre Laizet, board director of Bitcoin strategy at Capital B. Capital B has been the first and largest Bitcoin treasury company in Europe. We've launched back in November 2024. We were the third in the world at the time after Strategy in the US, Metaplanet in Japan. And we've been very glad to impulse that movement over in Europe and to have such a great team around us over in the European Union to push Bitcoin forward in the global capital markets and in Europe. I think the mission is a bit broader than just financial engineering. What we are effectively doing is providing for Europeans a way to protect from inflation and to protect from monetary debasement over the world. And that's teamwork. And I think that's why we are here today all together.
Thank you. And I think also, Alexandre, on the left, you are a veteran with your 1 year anniversary here on the stage, and Stafford on sort of the emerging announcement as well. So maybe just to set the scene is, maybe from your perspective, Alexandre, like what has happened the last year as well, and just also from obviously being a new business model, we've got media here in the room. What are the things that have been happening in the year where maybe there are some misconceptions or some things that have maybe not been completely interpreted the way that maybe, you know, actually this new model is what it's bringing to the markets? Maybe you can illustrate that a little bit more from your perspective.
Yes, so usually a Bitcoin treasury company is seen as this strange animal that is performing speculation in the market. While in reality, what you can see is any economy needs trust at the foundation. And what is disappearing is trust in traditional fiat currencies, the USD, the euro, not in the sense that it doesn't work, but in the sense that it doesn't preserve value over time. And so Bitcoin in that context and gold at the time, Bitcoin is now emerging as the unquestionable asset that you can trust. Why? Because there is this absolute scarce supply and you can trust it with your capital, and Bitcoin can be trusted for individuals, but as well for corporations. And what was missing is that Bitcoin can only be accessed by 2% of global capital because institutions all around the world and most people don't buy the commodity directly. And so they don't buy Bitcoin, they don't buy gold directly, they don't buy Bitcoin directly. They need access through traditional brokerage account. They need access to a security, to an equity, to a bond in traditional financial markets. So the initial idea of the Bitcoin Treasury Company and the model of strategy in the US that we are implementing at European scale is to provide a form of access to the best store of value in the world, which is Bitcoin, and to provide that exposure through different forms. So through an equity or through a convertible bond instrument for different types of investors. And so what has emerged is that it has become as a very emerging asset class, Bitcoin itself, only $2 trillion, with the ambition to go towards $20 trillion as gold is today. And now Bitcoin treasury companies that were only 3 a few years ago, and now that are more than 100 over the world. And so what is happening is Bitcoin is infiltrating global capital markets. And the best vehicle to provide Bitcoin exposure in capital markets is the Bitcoin treasury company that also provides, of course, the protection, but as well a potential compounding effect on the Bitcoin per share that increases over time.
I think, Stafford, from your perspective, coming in, you've had there's a lot of information already out there. How are you approaching it with stakeholders? Do you still see that sort of bridge? Because obviously we're here also to educate and create awareness. But are you getting some momentum of that, or do you really see that sort of conversation is just happening in from your region and your stakeholders?
So from our perspective, I mean, what you're saying is spot on. I come from a continent where debasement, political insecurity is paramount. You know, where we are, people die because money doesn't work in Africa. So Bitcoin's original value proposition, what a Bitcoin treasury company does from a value proposition, is very, very clear to us in Africa. So we do listing across multiple African countries. So it's a continental play for us. The only place that you can really do it in Africa, is on the Johannesburg Stock Exchange. So we've listed there. We do listed on the Namibian Stock Exchange. We'll be doing it in Botswana, Ghana, Ethiopia, Kenya, Nigeria, etc. So it's what's unique. What we're doing it's continental. So it's not a single country. And debasement is significant for us. Money being broken is endemic to Africa, and that's why we suffer where we are. So Bitcoin is totally the commodity. But what's different with us is we've taken a company that does private credit that traditionally was a listed company deploying private credit to SMMEs and providing jobs and impact at scale in South Africa. We're taking that Pan-African and we're taking this thermonuclear engine, this weapon, and we're shoving it into our private credit business. And we're combining the strategies. So for us, yes, the accumulation of Bitcoin, the levered, the dilutive, accretive way will absolutely, these best practices that have been executed will totally follow these folks. But we believe in Africa, what's important for us, as much as BTC yield is important for us, human yield is important for us. So on our Treasury analytics page, you'll find BTC yield, you'll find MNAV, but we have a human yield. We've actually calculated that for every Bitcoin that we raise in our Treasury, there's about 5 African jobs that are created. And that's meaningful. So we have a correlation between the raising of the Bitcoin Treasury, the galvanizing of our balance sheet, and our ability to get capital in different markets throughout the world at low interest rates and deploy them with great margin in Africa and enable those businesses. And Bitcoin is collateral that we can take all over the world. It's for the first time we have something that foreign markets recognize as collateral that allows us to raise fiat for private credit to deploy. So we have this flywheel, and as the SMMEs build out, the profitability in that business again aggregates into the Bitcoin treasury company. So there's a flywheel at the bottom, there's a flywheel at the top, and but we do follow in the footsteps of some of the giants that have emerged, some best practices. What you've done in France is incredible. We've watched all your videos, we've looked at everything, so we really studied it. But we believe in Africa, it can't just be financial instrumentation. It can't just be a pure Bitcoin play. It has to have a human impact. That's very, very important for us. So we're very excited about that. And we've deployed capital to more than 50 SMMEs. We'll continue to do this across African markets, scale it. It's very exciting. Bitcoin for us is an emancipation event. It's not a financial event. When you explain Bitcoin to an African, he gets it in 5 minutes. You explain Bitcoin to a Fortune 500 company CEO, it takes you a couple of years. You guys struggle. People don't get Bitcoin. We speak to them for long periods of time. But you go to Africa, you go to a township where Warren and I grew up, and you speak about Bitcoin, we get Bitcoin in a minute. because for us, we understand the core principles of money being broken and the impact that can have on society. So we're excited about taking the Bitcoin engine, wrapping it up in private credit and delivering something that was previously impossible for us to do, and delivering human yield. That's our driver. That's our core conviction around our BTC play.
So apparent as well is you guys are all going to also be on the stage the next 2 days. So the whole conversation as well around Bitcoin has really evolved into this Bitcoin treasury. So it's also great that we get the opportunity to talk to the media about it. Sometimes us understand that it might be quite difficult to understand and have access to certain people to get the information. So I'd like to just open the floor then. If you have a question, if you're from the press, and then as to who you want to put your question to. Anyone who's going to give it a go from the first? Barloos?
I can start.
Yeah, go for it.
I have a question to you, Stafford. You spoke about the human yield, which is super interesting, and we also see that in terms of adoption, lower income countries and developing countries particularly have a very high interest in terms of trusting BTC and other cryptocurrency. So what would you speak to in terms of improving? I mean, there's already some form of education that exists online, but there is also a gap, I feel, within the lowest income groups within these societies and having to understand cryptocurrency. So how would you, I know it's not strictly your job, but how would Bitcoin influencers and key stakeholders within this industry bridge that gap? And how would they make sure that those at the lowest income are essentially able to access this transformational technology for finance?
So thank you for the question. Great question. I think Bitcoin treasury companies, I mean, if I look at the best practices that have executed around it, a key part of the flywheel is education. So events, educating the formal sector, the informal sector. But where we come from, it's a world where Bitcoin is a medium of exchange. The media may not have picked this up yet, but in South Africa, people pay with Bitcoin. We have circular economies that have emerged in African townships where you got 300,000, 400,000 people that use Bitcoin as an MOE, a unit of account, and it changes their behavior. So in our market in Africa, as you go up, I was in Zimbabwe a couple of weeks ago, and I met with Zimbabweans. I mean, we frame their banknotes as proof of what fiat currency does and is, right? But I went there, they're using Bitcoin. They're using Bitcoin as a medium of exchange. And in some places, it's a unit of account. It's already happening. We're seeing people from overseas coming to Africa and being taught Bitcoin when they go visit some of these townships, which is quite profound. So what we're discovering on our side is that people are using it as an MOE. Our merchants, until Square made the announcement, South Africa and Sub-Saharan Africa had more merchant acceptance of Bitcoin than anywhere else in the entire world. You know, over 1 million merchants already accepting Bitcoin. So for us, we leveraging the impact that it's already had in Africa. So from a retail investor perspective, people are utilizing the asset. They hold it, they MOE it, it's a unit of account. So it's happened already, and we're riding on top of that wave. Now, what our responsibility is to ensure that regulators can keep up with this, and that's a big challenge. So what we see happening is it's not rebellion. It's for us, it's survival. In the northern hemispheres where these guys have deployed, it's kind of a rebellion in a way. It's like you're rebelling against fear. For us, it's a survival thing. If we don't have Bitcoin, since 2008, there's been an emancipation. There's been an eclipse. Something's happened, and it's gone viral in Africa. So for us on the ground, that's easy. And what we're bringing along is the institutional education, teaching our regulators, the South African Reserve Bank. And being in South Africa, we influence a lot of what happens in the rest of the continent. Mining, telecommunications, banking, etc. So it was very, very important for us to list on the Johannesburg Stock Exchange. But it's also the only exchange where liquidity levels exist where you can practically execute against the BTC Treasury company play. So yes, education's a key part. Enterprise education's very, very important. We are being watched. Everyone's watching us. Regulated. We've managed to change some aspects of the regulation to enable us to do what we're doing. We had to make those changes. But in Africa, although retail has adopted it extensively, it's illegal in most of Africa. We dual listed in Namibia. And the reason we dual listed there was the pent-up demand. It's not illegal, but there's no exchange. You can't use Namibian dollars to buy Bitcoin in Namibia. So what do? So obvious, we create the rails, we list on that exchange, we give you exposure to the equity, retail investors are adopting it, and so to institutional pension funds. Pension funds are real interested. But the challenge that we had with pension funds, and our CEO actually sits on the board of a couple of the largest pension funds in Africa, is pension funds don't want to deploy directly into Bitcoin, right? They can't actually do that. They're regulated against it, but they want exposure to it. But they want exposure in an impact way. So we've taken our private credit business, locked it in with the Bitcoin Treasury play, which gives them a pass through. So when the fiat comes in, we deploy it into the SMME base. We're incurring jobs, having impact, and the flywheel feeds back into the Bitcoin Treasury Company. That's a beautiful story for them. So yeah, it does take education. It does take education to make them understand what we're doing. That's the biggest challenge I think everyone on this stage has. The problem that these guys have is that the traditional markets still don't understand Bitcoin. And we've rushed so far down the line doing what we've done, but I think we still need to take some time for everyone to catch up to truly value our treasuries. Our treasuries are not valued. So they look at the Bitcoin price and it's speculative, even the way treasury strategy itself is valued. And I think, yes, in Africa, education is huge, but retail has already done it. The horse is bolted. We catching up from an institutional perspective. Yeah.
I think, Ross, maybe you can add to that from sort of, you've gone through some motions at the moment as well when it comes to educating stakeholders and bringing them along. We also in Bloomberg a few weeks ago, well, I contacted you and you weren't in the same camp as some of the other Bitcoin treasuries that had gone and started that dialogue. But how are you approaching that conversation in sort of the Asia Pacific region? And what are you seeing in terms of feedback from certain regulators and other stakeholders institutionally?
Yeah, it's mixed. I mean, we have 60+% of the world's population. We obviously have very, very strict regulations in China. India is slowly coming around, and I think probably going to start regulating the industry over the next year. We have other markets like Thailand that have just completely opened their doors and have even already declared a zero tax on crypto trading. So they're trying to embrace the industry. Where we're based in Hong Kong, it's somewhere in the middle. We have obviously a very long history or sort of a legacy with Bitcoin and Bitcoin mining across the border in China. And actually a lot of the original sort of OG Bitcoin whales are actually Chinese guys who had been mining it, through 2015 to 17 primarily. And a lot of that Bitcoin and a lot of that crypto that was generated out of China came through Hong Kong. So what you saw was originally Hong Kong was the hub. I think everybody here knows that's where, BitMEX started and FTX started, and you had a lot of the genesis of sort of the APAC build on crypto came out of Hong Kong. They pivoted and then really kind of pushed the industry out. Singapore obviously embraced that. Dubai actually picked up some of that slack for some time. But now they've reversed this. And so what we're seeing for Hong Kong specifically is that China or Beijing has basically given a green light for it to be a sandbox. And so just in the last year and a half, we've had full-blown crypto regulation, VASP licenses issued to exchanges and other participants. Stablecoin legislation just passed about 6 months ago. And so there are a number of applicants looking to launch their own stablecoins. Very soon we have custodial licenses being issued probably by the end of this year. And so they're building all the sort of foundation for crypto to, again, sort of, Hong Kong take that hub brand back, that label back. So we're quite excited about that. I think, right now I think it's safe to say that Asia in general is a very mixed playing field. And so our strategy with our investors is really to tap each of the markets and then figure out and tweak what the local strategy is going to be for each one. It sounds a little bit like the way that you're viewing Africa, where different governments may have different views. And so we plan to leverage each other in each of these APAC markets to even sell product to each other and be able to exchange best practice, maybe even centralize some of our activities. For example, we're talking already about setting up a centralized trading desk where we can potentially, even look to execute certain derivatives or things like that around Bitcoin. So to answer your question, I think APAC is very dynamic and very diverse. Huge populations, very experienced crypto markets in general, from Korea all the way to, places like Thailand and India. And so the real wild card is China. And we just don't know if all of a sudden they're going to pivot and say, we're going to allow our, retail investors, 380 million retail accounts, to access crypto in some way, shape, or form. And so that is the ultimate wild card, sort of the ultimate call option for a company like ours, which is listed in Hong Kong.
Maybe a follow-up question for Ross. Could you elaborate more on stablecoin legislation that I believe has been adopted in China as well, or they were hinting on following the Genius Act, and I don't know, what's happening there and why?
So currently it's Hong Kong only. Onshore in China, they actually have the eCNY, which is basically a CBDC. They had been trialing that for years, and so the plan was for China to roll out the eCNY to multiple Asian countries, effectively be able to bypass SWIFT system, collect, for work that they do throughout the region. That really has kind of stalled out, and I suspect that China's watching very closely how things evolve in Hong Kong. So Hong Kong is really sort of this carved out test bed, and without a doubt, they're watching very closely. I'm sure the Hong Kong regulators also feel that because they are cautious and they're very intentional with sort of the cadence of how they're rolling out these regulations and how they approach things. And so there's a level of caution there that, for us as an operator there, we have to sort of go at their pace. And so, for our company, for example, we're not able to stack Bitcoin as fast as Metaplanet. Right, we just don't have the ability because of certain regulations in Hong Kong. So we have to also bide our time. But I think optimistically, the fact that they've kind of given Hong Kong this green light, I think is a very good sign.
That was, you call it a sandbox, right?
Hong Kong, yeah.
Okay. And then is the legislation comparable to what you see in the EU or in the US? I mean, within the sandbox?
Yeah, it's a fair question. So I think the US is clearly leading. I think Dubai is actually also leading. Singapore, I think, was really storming ahead for a period of time. I think they've started to kind of pull back slightly. I see this as an opportunity for Hong Kong. The legislation is, I would say it's on sort of like a 6-month to 12-month rolling basis where they're sort of laying all the groundwork across all the sort of features of crypto. I will say that for Hong Kong, they don't differentiate between Bitcoin and any other crypto. I don't think they're there yet. They're not that evolved yet. Whereas in the US, you can see that, right? You can feel that. Maybe not at Trump's level, but at Eric Trump's level and Don Jr.'s level, they're Bitcoiners. So I don't think we have that delineation yet in probably the whole of APAC. But I think it's coming. And I think that, where Hong Kong is right now is a very unique moment in time where they're very focused on it. I think just last week was the Digital Asset Forum. I spoke on one of the panels there about DATs. Well, I was the only Bitcoin DAT, but the other guys were building Solana DATs and ETH DATs. And so this is very front and center and very exciting because, we have really come out of kind of a few years where crypto was kind of almost banished and pushed out of the border.
I got a question regarding your strategy of all of you for what's next. There was like a huge enthusiasm like 8 months ago, a year ago for the Bitcoin Treasury companies. We have seen lately, as we say in Spain, I'm coming from Spain, we say sangria on the market. The enthusiasm is like going down. There are like lots of struggles for the companies and the Treasury companies to maintain the level of the shares as it used to be like just a few months ago. So what are your strategies, if you can reveal any, to come back to the stage of the trust from the market where it used to be like a few months ago? I heard some short spot recorded by Tim Kotzman. He was talking about the presence in media, the building trust, full transparency in the reporting, AI, of course. Like Alexandre was building all those fantastic products with the AI. But what else? What else? What would be the steps like to defend your position, to defend the future of the Treasury companies?
Khing, should we start with you?
have to kick it off. I think it's a great question, right? The way that treasury companies go and actually that space broadly is like it's almost traded like a coin, right? It's very sort of extreme cycle up and down, and it's very interesting to see also how in a way traditional the way that equities trade and the way that crypto trades have come together in that sense, and in terms of participants, everything around it. So we are where we are. We really again take a step back. That 1.0 was strategy who created the whole sector. 2.0 is what we've seen this cycle with lots of coins, lots of companies coming to market, some of which probably shouldn't have. And now where are we going with 3.0? Where are we going in the future with this? And from our perspective, I agree with everything you said, transparency, communication, making sure we have the highest standard of reporting and everything that a public company should do. I think the other one is also the business models themselves are evolving, right? It's very interesting to hear what Stafford is doing with real economic impact of a Bitcoin treasury company. The way we're looking at it is in some shape or form kind of becoming called the banks of the futures. We're not sure exactly how yet. This is still developing, but using your Bitcoin balance sheet in some shape or form productively. And that in itself then becomes the bridge from Bitcoin itself as digital gold, which in itself is obviously a sort of a passive hodling, to making sure its value is bridged into the economy, whether that's staking or lending or other shapes of doing that. So I think broadly speaking, that's where we're thinking about it. It's making sure that as a business you justify your valuation, whether it's a premium or somewhere around it, but you think you probably have to do a little bit more now to earn that, I think.
And Sander, you do the European. You organize yourselves very clear in regions, so it's very easy to go up.
Yeah, how I look at the industry today is that we have explored oil. We know where the oil is sitting, and it's sitting on a lot of these balance sheets. And the next step now is to take that oil, pump it up, and put it into the refinery and see who will create jet fuel, who will create asphalt, and who will create new products. Because I see what you're actually buying in a Bitcoin treasury company is the trend of accelerated decreasement of centralization. And we started like back in the 70s, we had a lot of local trade. And then we started oil and shipping and everything accelerated. The whole world got better because we gave the power back to the people. And social media is the same. We took, I'll be careful here, but social media gave the people the power to speak for themselves, create their personal brand, and take ownership of themselves. And now Bitcoin is doing the same with money. And we are giving institutional investors, and in some cases also retail, the ability to participate in that mega trend. And we now have a lot of Bitcoin on our balance sheet, and I think we will separate the balance sheet in one part, which is equity, and another one is liability. Sometimes we raise equity, sometimes we raise debt. I think Bitcoin treasury companies are going to be more transparent on what is equity and what is debt. And the equity part is particularly interesting because we believe Bitcoin is the best store of value in the world, similar to gold. But if you go back to the 1600s and see how the banking system evolved from gold, was when you was able to access credit against that gold. That's still not very well developed in our industry, but I think it's going faster and faster, because the moment you can actually access cheap credit against your balance sheet, that's when these business models will be able to get a lot of economic power. The reason why is that if Bitcoin do what Bitcoin has done, the credit you get when it's backed by Bitcoin is actually decreasing in value over time and strengthening the balance sheet of each Bitcoin treasury company, because you're hedging against inflation and actually capitalize on that inflation. So that's where I see it. From our perspective, we work a lot on the credit side. We think eventually we will get access to institutional capital against that equity or Bitcoin we have. And that's on top of course, collaboration between the companies, because we are building an industry. We're not building companies here, we're building a new industry.
Alexandre?
Yeah, I would like to add something related to the question on stable coins and the question of education and the one on what you can do to get back to the levels that we were before. I think a term that is typically has a negative connotation is speculation. And basically the question of how to do to get back to the levels of June this year is how to get back to positive speculation. Because today it's a bit of negative speculation, and speculation is not bad. Every economic actor is always speculating to make a decision. Speculation is just from Latin speculare, which means seeing something. And it's not bad to see something. And if you decide to not invest, you are speculating that this is not a good investment. If you decide to invest, you're speculating that this is a good investment. So back in May and June, people were speculating that Bitcoin treasuries were going to have a big moment of growth in the following months. And what happened is people were deceived by the performance of Bitcoin itself. And Bitcoin stayed flat during 1 year and underperformed gold. So if you are underperforming gold and your use case is to replace gold, then people are deceived and the speculation starts to go downwards. And that's what you've seen between June and now. You've seen a compression of the positive speculation of the investors. And the macro context and the stablecoin context is that you think that you are seeing a stablecoin, but in fact, the stablecoin bill is a Bitcoin accumulation bill. Why? Because the stablecoin interest from the United States government is to get demand for the United States government debt. Because on 5 November 2024, two things happened. Capital B launched its Bitcoin Treasury Company strategy, but Donald Trump got elected. And that is the date where the United States government basically recognized that the United States government is basically insolvent if it cannot print more debt. And so that is leading to two conclusions. The first one is the United States needs to print as much dollars as possible to reindustrialize the United States and bring more scarce assets into the United States. The second conclusion is, what is the best scarce asset? It's Bitcoin. And that is why you have a United States reserve that is Bitcoin. It's the only asset that the United States will never sell. The only asset the United States, they will never sell. And so if you look at it, you see that the US government and the Trump family, everyone is literally inviting US corporations to accumulate Bitcoin. And that is extremely similar to what happened in the 17th and 18th century in England and in France, where groups of entrepreneurs were told by the authorities to form corporations to accumulate gold. And that became the Bank of France and the Bank of England over time. And so to the question of what to do in terms of education, in terms of business model, to get back to that level of positive sentiment around what Bitcoin treasuries can become, my answer is to double down. To double down. I will not change the business model, and the best education is financial performance. Bitcoin has no marketing team. Bitcoin has absolute scarcity and global adoption. And the Bitcoin Treasury Company, yes, there is a guy with an orange tie, but ultimately what matters is to have the best asset on earth, to accumulate it faster than others, and to be more conservative than others on the asset side of the balance sheet. It needs to be extremely boring. I want my shareholders to have peace of mind that I will not do something that screws up the asset side of the balance sheet. I want that balance sheet to go only up over time. Like you can see the M2 money supply of central banks. I want that to be the balance sheet of capital B, except that it doesn't vary. It just goes straight to the right and up side. And on the liability side, as Sander was mentioning, what matters is how do you actually innovate to provide a broad set of different types of long-term liabilities and other types of liabilities as well over time to make sure that you will maximize the capital raising capacity and you will maximize the demand for broad set of investors to get exposure to that Bitcoin amplification vehicle over time.
Oh, I got 3 questions for the price of 1. Did anyone have a Marlos?
Could you tell me about the European experience, maybe to the gentleman on the left? Because you emphasized the Trump family and American legislation, but you're both based in Europe. So do you see a European strategy? What is it? And maybe also focus on stablecoins in that context.
So before joining Capital B, I used to be digital assets lead at Accenture. And I used to work with actually central banks and commercial banks on the adoption of digital assets and digital currencies. And the big topic at the time was the digital euro. And what happened with the digital euro is no commercial bank wanted the digital euro because it would imply that they would have to have a 1-to-1 ratio between the cash. It would separate the deposits from their what they manage with the current system to the digital euro, where they would potentially, like Europeans, could have the option to take money out of the commercial banking system and go to the central bank because the central bank has the best collateralization because they can print the money. And the commercial bank has this issue that it could be in a position if all Europeans take all of the euros and put that in the digital euro, then they could be insolvent. So they were extremely against, and that's why it's extremely slow, and you have these conflicts, and nobody wants it, and the retail doesn't want it. But for the ECB, it is very important to have a solution to the American expansion of both the USD through the stable coins and the private stable coins that are, by the way, issued by a Switzerland entity. So it's very contradictory to have seen the emergence of this extremely innovative company out of Europe and to have this ultimately competing with European currencies.
You say that it's completely based in Switzerland?
Well, they are a global company, but their headquarters have been a lot in Lugano in Switzerland. So it's quite ironic that it is, in fact, a European entity and team that has created the best USD stablecoin that is taking over the world. And so in that respect, what I see is nobody in a state where everybody has choice between stablecoins in euro and stablecoins in dollars, the market today has decided. In Europe, 95% of the market uses USD stablecoin and non-euro stablecoin. And
so your answer is there's no European strategy?
There is a European strategy, but on what is really money, which is, in our view, Bitcoin. So, in fact, the stablecoin is just a representation of a US bill from the Treasury. It is not really cash. It is the selling of the Treasury of another company, of another country, sorry. And so, in that respect, the edge we have in Europe is actually the well-developed capital markets and freedom that we have over in Europe. And when I was listening to the potential issues with regulators and the views that governments can have that can hinder the capacity to innovate, in Europe, in France, I don't have to ask to the government what they think about the Bitcoin treasury company. I don't have to wait for a rule that allows the company to raise capital to accumulate Bitcoin. we have the freedom to do it. And that is a key aspect of Europe that I strongly believe in, is we have the capacity to leapfrog from the stablecoin area, which is just a transition space towards Bitcoin, effectively. The largest issuer of stablecoins is Tether, and they are a Bitcoin company. They have a Bitcoin balance sheet, and they have created a Bitcoin treasury company in the US, together with Counter, which is the company that's been led by the current Secretary of Commerce of the United States government. So in that respect, the stablecoin is a way to maximize Bitcoin accumulation by the private sector in the United States. And so in Europe, what we have a responsibility to do is to recapitalize the continent with the scarcest asset on earth, which is Bitcoin. And that should come by the private sector. And that is what Capital B is focused on, to maximize the number of international capital that can come into Europe and come back to Europe through Bitcoin on the balance sheet, and to get more volatility, more liquidity into capital markets in Europe. After 1 year of strategy at Capital B, we are already the #1 most liquid stock on Euronext Growth Paris. We are part of the top 5 most discussed stocks in France. And that's what I mentioned when I said financial performance is the education. And on top of that,
because we're just in interest of time as well, and I want to make sure that you can have lunch with Alexandre if you want, Marlos. We can make that happen. Maybe Sander, if you can give your view, and then maybe Khing, you can also just round off so we can complete the media roundtable and then break for lunch as well, so that the rest of the program can get started. That would be great.
I don't think I have much to add on the strategy of Europe in general, but I want to mention that in Europe, since we get the euro, I think many have felt that the security in the major cities has decreased. And when you see these centralized, big bloated entities, I think many can agree that Europe is not the same place that it was 30, 40 years ago. So I think it's actually a big movement now for especially younger individuals that understand that a lot of this freedom is taken away from them, and they can't afford houses, they can't afford living on one salary and having a family of 4. It's very, very tough actually to be a young individual in Europe. And I think EU and the euro has actually been part of that problem. And therefore, I think a lot of Europeans now see to Bitcoin as the solution for how we can regain strength. And that's not particularly what we're doing in Bitcoin treasury companies. But again, I think that's the major conflict in Europe right now, is how can we ensure that we can have the same European standard of living that the people in the 70s had. And that's decreasing faster than ever. And that's what makes me concerned. It's actually like the rebellion against the more centralized system.
Khing, just to finalize and end the media tango.
Final thought on that is, as Russ mentioned, obviously the US is leading from a regulatory perspective. The different laws being enacted, the Genius Act, etc., is really very forward-looking. My sense is that in Europe there is, I think, a European strategy. I obviously had MICAR, and they're working on the stablecoin legislation. But it seems quite reactive, and it doesn't necessarily seem progressive, I would say, in the sense that it's when I read sort of headlines on that, it's usually quite sort of, I guess, almost like anti what's happening in the US, saying, look, we got to regulate USDC more and USDT, et cetera, et cetera. So I think we're all sitting here as Bitcoiners, we all believe in digital gold and the ecosystem growing. I think the moment that also the regulators in Europe, or politicians for that matter, will have that switch that, okay, this is here to stay, it's only going to grow, that will hopefully create a more constructive environment.
Stafford, wonderful. If you can maybe within 1 minute.
1 minute, yeah, I can do it in 1 minute. I think the question that you asked is an extremely important question right now, and it's probably the most pivotal question the entire industry is facing. MNAV's at an all-time low, sentiment is at an all-time low. What's the rest of the story? Yes, you can double down. That can be the strategy. But, from our perspective, where we are down in the middle of nowhere in Africa, we don't think that's good enough. I think the market's looking to see what can you do with this Bitcoin that you've accumulated. And it doesn't necessarily mean you liquidate it, you sell it. But it's a beautiful, pristine mechanism that when you combine it with something that can have high impact, you could completely change market sentiment. And I think as Bitcoin treasury companies, we need to demonstrate that. I think the market is tired of the Michael Saylor type analogies, the historical metaphors that we keep repeating over and over, the oil, the refining of oil. I think people are tired of that. People are saying, what's the rest of that story? And I think when we sat down, when we compiled our Bitcoin strategy, that was so pivotal to us because we were fatigued by it also. And we could see that the market sentiment was declining over time. And taking private credit, it's just as an analogy, just as a business, and then shoving this Bitcoin engine inside of that really redefines that. And we hope that it'll be an example for the world to see how you can take a Bitcoin treasury and not necessarily create liabilities or a risk around it, but you can actually utilize it as a mechanism to have true human impact and not just financial rebellious impact, which I think is important. And I think we need to achieve that. But this is a beautiful asset. And with this asset, you could do things to change people's lives. And in Africa, that's paramount for us, right? And that's why we're so big on human yield. It's not increasing the risk or the liability, but it's taking. And I think the market's looking for that. And I want to encourage all our Bitcoin treasury companies in the world to take a look at, these principles and take a look at some of these examples, because I think the world is growing fatigued by this vanilla story and they want to see more. And I think we're capable of doing more. These leaders are incredible. These gentlemen on the stage are insane in terms of what they're doing. So I think there's more. And I think this will happen. And I'm excited. And hopefully down in Africa, we'll do something that's a best practice. It's an example of where you don't have to hit escape velocity like Michael Saylor has, where you need 650,000 Bitcoin. But you can do it with 20, 30 Bitcoin. And you can have real economic human impact with that strategy. And hopefully we'll see more of that from the industry. Yeah.
I think that's a really nice note to leave the video on. So thank you so much to all of you for participating. Thank you for joining as well. It's a lot more people in here than media at this point, so we'll leave you for lunch. Enjoy the rest of your afternoon here at BTC for Corp's event.